The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6, 7 years.
Oh.
I mean, just on the radio, didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tigress.
Well, you're already a tigress. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great week, safe week. Let's make it a great weekend, and let's make it a great week. Let's take a look at one of our 4 agreements. Don't overdo. Always do your best, but don't overdo. When you overdo, you deplete your body and you go against yourself. And it will take you longer to accomplish your goal. Market-wise, let's take a look at it out here. We had the Dow Industrials down 17, Nasdaq up 12, S&P's flat. Gold contract down $1.80, trading at $1,620 an ounce. Silver off 31 cents at $28.20 an ounce. Platinum down $15 at $1,429 an ounce. Copper up a penny at $3.32 a pound. Light sweet crude up $1 at $84.37. That baby's on its way down to 75. Bonds down 19 ticks at 152.01. That's going to build some cause. That wants to trade into $1.60. King dollar. King dollar on Friday, folks, got into the highs of August of 2010. That number was 83.67. 64 rather. We hit 83.67. King dollar backs down today, down 32 ticks. You can expect it to build some cause to do what? To get into 89. Big numbers. Euro up 60 ticks at 124.94. Bottom line with the euro is going to build some cause to get into the 119 area. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, baby, here we go. Now, last Friday, what did we do? Last Friday, down from 1309 to 1277. Now, you did 999 million, folks. Now, there's divergence here, and this is what it is. You broke the B point of an ABC structure on the way down, but you broke it on the indices with lighter volume. The way that sets up, when you do it with lighter volume, 2 different things end up happening. I suspect it's going to turn into a complex ABC structure. Still down. What does that mean? It means that as of today, what we did today is this. We did 816 million shares today. We did 999 million on Friday. Well, it had to do more than 1.3 billion to get the full price projection on the way down. Now, this is the S&P because we have a divergence. So watch how what happens here. So today what we did is that we got to 1266. We closed at 1277. Well, 1277 is not good enough. You know, I suspect it's going to try to get back inside 1291. You get back inside 1291, the volume contracts as you're going up. That is just a complex ABC structure on the way down, and it's a monster one, too, by the way, folks. 1415 is your A point. 1291 is your B point. So you're talking about $125. That 125 off the 1334 gives you 1210. And 1210, bottom line, brings you right down to the lows of December of 2011. Now, that's your S&P. We go over to the Dow Industrials. Now, watch what happened with the Dow. Dow Industrials break the B point with conviction, monster conviction. Now, on the indice, you didn't have the volume, but what you did have the volume, and this is where it's going to get really wild, is in the diamonds. The diamonds had the volume, broke the B point with volume, and, we did 11.8 million shares versus 10.8. That sets up that the diamonds want to get down to $1.17. We correlate that back over to the Dow Industrials. You're talking about 11,500. We'll see how we get into those areas. What the Dow did today is this. The Dow got to 12,035. Now, what's interesting about that is this. We're going to go all the way back to December 20th to see what we did. The reason being is this. The Dow Industrials got into the highs of the high of December 20th. Okay, so it's important to understand what is the volume of that December 20th. So let's go and do that right now. And the correlation there, folks, goes like this. The correlation is, where's the supply and demand line? Okay, so we look at that. Well, you know what? It was 947 million shares. Well, this is really wild. Okay, so picture this for a second. You're talking about December 20th. You're talking about coming into Christmas. You're talking about low volume, right? Well, bottom line, we did lighter volume than that today. So your correlation is 816 million versus 947. What that's saying, bottom line, is that the Dow also wants to bounce. So it's going to be a complex ABC structure. On the way down, by the way. Now, let's go over to the NASDAQ. So, what did the NASDAQ do? NASDAQ on Friday took the B point out to 2774 on 1.7 billion. Not enough. Why? We're going into 2.7 billion. NASDAQ today, I'm sorry, 1.9 billion. 1.9 billion on Friday. Today we did 1.7. NASDAQ went to a lower low today, rejected that lower price, but still hasn't got back inside the higher range, which is 2774. We'll see how it can make itself back inside that level. We go over to the 3Qs. You take a look at the 3Qs. What you have in the 3Qs is this. They came down. What they had to do more than 74 million, and they did 71 million. So your correlation, if you're long this market, you're going to get another shot to get out. But let me tell you something. You better pay attention to what's going on, because this market wants to trade a lot lower. Now, Russell 2000. What did the Russell do? Now, the Russell 2000, folks, okay, was in harmony. And specifically, the indice broke the B point on volume. The IWM broke the B point on volume. All of the above. Now, what we also did is this. If you go over and take a look at the IWM, we go back to December 16th. December 16th, we come off the low with what? With some good volume on the way up. The Russell 2000 had 633 million shares traded. The high of that is 730.73. Well, guess what, folks? We went into that today with lighter volume. We went to 729.75. So the Russell's saying it's also going to bounce. So now, where are we going to go from here? Okay, so what you have here is that you got the, okay, let's talk about the tick next. When you get bounces, okay, so here's the divergence. The divergence is the Russell broke the B point in the indices, broke it on the ETF structure. The Dow Industrials did not break the B point with conviction, well, conviction price-wise, but not volume on the indice, broke it on the diamonds. The NASDAQ did neither. They will get back in harmony. And that harmony, folks, is a very large ABC structure on the way down. That's what it is. What we didn't get for a large bounce is that we didn't get any fear in the marketplace. There was no, a couple downticks, nothing big in the trend. That's what it takes in order to get a larger bounce. What you do get is that we got a rejection of price out here today, but when you get a rejection of price without the fear in the marketplace, the baby won't bounce as far. Now, let's go over to King Dollar. What did King Dollar do? What King Dollar's done is this. We went from a price point, okay, of 78, and that 78, the structure that it was going after was the week of August of 2010. The high there was $82.80. 63 cents. Well, guess what, folks? We tagged 83.67. Pretty amazing, actually, but that's what we tagged. Okay, so what does it mean? Well, now you can expect that you'll back off. Now, I don't expect the dollar to back off much. I expect it to back off about the 81.18, the 81 level. That's building cause to get into the 89 level. Now, what is really wild is this. The way this is structured right now, because we came into that 83.63 with such force, is you very well can go to 93. That would absolutely blow people's minds. But you know what? That's how that's set up. See, there's a swing high at 89, but the way this is set up is that 93 is on the agenda. You stay right there. We're going to come back. We're going to talk about gold. We're going to talk about bonds. We're going to talk about whatever you want to talk about. It's a beautiful thing. This is Tom O'Brien. This is TFNN. Appreciate all you tigers and tigresses out there. We're going to be coming right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.